Hey everyone, welcome to AGI podcast, and this is Bill. And today I have a very unique guest that is one of the deepest researchers in the AI compute space, Wei, who has been working in SemiAnalysis and also doing very deep research in the whole space about tokenomics, which is not the crypto tokenomics, but the AI tokenomics about large language model token, about GPU cost, and about electricity, and also about how these basic unit economics lead us towards better models and potentially how the whole society will change according to this kind of base cost. I'll let Wei introduce himself.
Oh, you shouldn't let me. I mean, where do we start?
Maybe your
no. Let's. I don't want this to be about me. Like it should be about you, Bill. Come on, let's do side by side. All right, Bill, where were you born?
Okay. Let me have. I'm born in China, Lanzhou, and I did my undergrad in China, Peking University Math, and then Stanford Math PhD. On the road, I did AI research in Google, where I do more transformer stuff and put transformer working in question answering. And I also did algo trading in the middle. I was alumni in Citadel in 0.72, and after the PhD, I went to Millennium be a portfolio manager. I managed around $1 billion for 3 years, equity quant stuff, and then over the last 3 years, I've been entrepreneur, just doing startup, and on the side, I also do some research and get fun with all the researchers, founders, and also do kind of public market investing on my own. Yeah.
Yeah, Bill, come on, don't be too stiff. All right, this is this is chill. So I was promised that this would be an unhinged podcast, and now Bill is going all vanilla milk toast on me. So I'm I feel like I was missold. So first things first, I would like everyone to see what I pulled from my Miniso blind box, which is this is Shin Chan. For those of you who don't know, is a pretty famous Japanese anime. I don't know, it's super cute. And just like in the AI world where everyone sees one company succeed, everyone hops on the trend. Miniso has hopped on the trend of Labubus and have started making. Now this is extremely. I would argue this is probably cuter than most of the Labubus.
I grew up watching this thing, right?
Oh yeah, he's mostly So unfortunately, because this is like a commercial product, he doesn't have a dick that he can swing around. He has this thing here, it literally says Miniso on it. Miniso, feel free to reach out to Bill if you want to pay him. Miniso, ticker MNSO for those people that want to YOLO gamble on this thing. I'm kidding. There's no investment advice here. Well, so the reason why I wanted Bill to give his background is actually we have pretty similar backgrounds.
Yeah.
I grew up, I was born in China, not in Lanzhou Lamian land, but in the land of the AI, aka Zhejiang. And I mean, is that true?
Okay, yeah, I disagree, but
really,
okay.
where are the most crack researchers in China?
I don't know this, but I think it's pretty concentrated in one place, Beijing area.
This is a PKU grad, guys. So a PKU grad would tell you this, but everyone knows that it's actually Hangzhou and because
it's in the DeepSeek office.
Yeah, DeepSeek, Alibaba. Come on, everyone PKU ends up wanting to go to one of these because the North, it's very politically oriented. In the South, it's more free. People are more chill, right? Just think about Shenzhen. Shenzhen developed because it was as fucking far away from Beijing as possible, right? Almost before entering Cambodia. So I don't know. You really don't. I think Zhejiang is the home of Chinese AI.
Okay, yeah, I can buy that for the next maybe half year. I actually think it's just proportional to talent density and capital density. So
really,
I think it's gonna be 3 center pretty much for the next 5 years.
What's the 3 centers? So Hangzhou,
Hangzhou plus Shanghai.
Okay.
Shenzhen plus Hong Kong, and the third is Beijing and the circle Beijing.
That's
just because of the talent.
That makes sense. So. That's kind of where the main companies are too, right? Shenzhen, Hong Kong is Tencent. Hangzhou, Shanghai is Is ByteDance mostly Beijing or
Beijing and Singapore.
Singapore, right? Yeah. I wonder what they're doing in Singapore, Bill. Do you have any idea?
No, it's like lose contact for a long time.
Okay. All right. Yeah. So we both grew up in China. I moved here when I was 5. How old were you when we moved here?
2012 when I was like 20.
Wow.
I'm here during undergrad.
Wait, so you're like my age?
Yeah.
Ish. Okay. Okay. Yeah, I moved here when I was 5, so 1995. Then I grew up in Ohio. Went to school in Dartmouth because I couldn't get into Stanford. I'm just kidding.
Sorry,
sorry for my loss. No, it was cool. It's it's a school. And then like you, I fell to the siren song of money. So I'm curious, Bill, like, for someone that gets a PhD, what were the choices back when you got your PhD? Like, was it literally like money or GDM, or like what was it like? Yeah, like how do you make that decision, and why did you choose money?
Actually, was thinking about doing startup around like 2018. I mean, I have like a return offer from Citadel 2018, so I can easily go and.
So you interned at Citadel during your PhD?
Yeah. I think I made a pretty decent progress there. That like
securities or Citadel?
Citadel GQS, the quant side. And from there, I was just thinking, okay, I actually want to launch a startup, and to launch a startup, it might be beneficial to be a professor, which is like totally convoluted way of thinking, but I'm too young to realize that.
I thought most professors suck at startups. Like,
I
mean, I'm not going to name names.
I mean, my professors are too successful to set role model that make me think, oh, as professor, you have higher level. I mean, if you look at Stanford, a lot of the professors are so successful at startup, right? If you look at Chris Ray.
But did they start the startups, or they just like seed and invest and found talent?
Start.
Really?
Yeah.
But now, what was it?
Co-founded the startup.
But that's the thing. Was it like a scattershot approach? Because like my guess is a lot of these professors are looped into the startup, and then once it starts taking off, they're like,
no. If you look at, for example, Mate in Stanford was like a Berkeley PhD, and then Databricks, and then Stanford. And I think there is this tradition for Stanford professor to be like, okay, I also, if I have a very successful startup, it actually help my tenure and all that.
Oh, really?
But that's actually not true in most of the other schools, and I didn't know that until I got a bunch of offers and
Bill, you promised me this would be based and unhinged. So, what's your based and unhinged take on Andrew Ng and Fei Li? Come on, you got to do it.
I think Andrew was having a lot of firepower during my days of Stanford time.
During the Baidu days?
2014 to even before the Baidu days, I think he has. I actually sit in his famous machine learning class.
Oh, really?
Like 1,000 people. And at that time, he was one of the kind of celebrity leader of the whole space.
Yeah.
Like, I think Baidu at that time made also pretty significant innovation. I remember I was observing some of the early scaling law behavior, measuring how the different layers behave as a function of data size. And I saw this paper from Baidu Lab that is basically a pretty clear straight line plot of like how the log data size.
Wait, so was that before like GDM /
Yeah. I think Baidu is the first one to observe.
That is based
of like a scaling law.
Baidu, the most hated Chinese internet company by most investors, was the originator of the scaling law. I fucking love this.
They observed this pretty early, and also I think
that's before Andrew was there.
Oh no, that's around the
time.
I think either on or after Andrew's time there, and then Andrew do this landing AI, right? Yeah, after landing, I don't know what Andrew was doing. So
what about Fei Fei?
Mostly, Fei Fei is really a visionary leader, and I think his taste is something I don't understand and appreciate that much during Stanford time, but now I really appreciate like making like a concentrated bet on data is valuable, and let's just do this crazy shit of like graduate student being like a data labelers. So do this like a boring job, but create a huge data. I think that's something of like a new paradigm, and very few researchers are willing to left their like mathematical proofs and actually just create data sets. I think that's like very visionary people.
Interesting. Yeah. Now there's huge businesses built on just creating data sets.
Yeah.
A lot of data sets being created by China.
Yeah.
Yeah. I think the funny the deep dark secret of all these AI labs is they use all this verified data from China to make their models better. Okay, cool. What were we doing? Backgrounds. Oh yes, and then finance. Why did you choose money over contributing to society? Like, what's the?
Oh, I think during my PhD, I was pretty into this question of can I build a kind of AI model that actually beat all the traditional statistics optimization based financial approach,
like StatR,
like
StatR, trend following.
Yeah, since both of my advisor made a really famous contribution in academics, like say compressive sensing L1, which is basically the most effective high-dimensional data analysis tool before deep learning comes around. And every quant is using L1 and all the linear method on top of this approach. And also like every single quant is using like a convex optimization pretty much until now.
Yeah.
And I was like, oh, I see deep learning and it revolutionized the kind of like image tasks, image classification tasks since 2012. And it's very clear it's a powerful nonlinear function approximation for high dimensional data.
Yes.
And it should just work on quant finance data, even if it's like super noisy.
Do you believe that Rentech invented deep learning before anyone else and just didn't tell anyone? And then that's how they were able to compound 45% a year forever?
No.
Really?
I don't think so.
But how can you prove that? Because Rentech literally...
Oh, like, I cannot prove it, but I just have
You really don't think so? You don't think they have a giant A100 cluster or P100 cluster that they just weren't telling people about? By the way, for viewers that don't know, Renaissance Technology is the most successful hedge fund in the history of Earth on almost any objective measure. Maybe not in total P&L, because I think at one point that was Bridgewater just from scale, but then, you know, Bridgewater returns have sucked. What was I gonna say? So, and there's a theory that they basically figured all the shit out before everyone else, right? What did they do? They went back and collected tick data that was literally in libraries and stuff, right? You guys read the book, The Man That Solved the Markets? It talks a lot about this. They literally went back and like had dudes like scour libraries for tick data on S&P 500, and they gathered all this data, they labeled it, right? They paid these freaking PhDs shitloads of money to fucking label data, which we are doing again today, by the way, at scale. At scale AI, just kidding. And then, you know, he did this and it wasn't working, but then eventually he figured out how to make it work, especially on equities, right? The largest asset class in the world. And my pet theory is that, you know, essentially they figured out deep learning and stuff at scale before anyone else. And then they refused to tell anyone because Rentech has a notoriously secretive, they fucking make you live in New Jersey or something like that.
No, Long Island.
Long Island? Okay.
Yeah, like near.
This is like the Stepford Wives. They literally have you fucking live in this like community, and you're only allowed to interact with the other researchers. It's more like they were secretive before like OpenAI.
No, that's also not true.
You don't think so?
I mean, they are rich enough to helicopter into New York City and have parties and all that.
Well, yeah, but
the setup is they want to attract academic talent that are excellent, rather than like traders and the typical quants that basically flow around all the other shops, so that IP leaks. Right.
So is it true they do not hire people for finance? They only hire like virgin PhDs, and by virgin I mean both.
Yeah, I understand.
Virgin as in job, and also has never had sex.
I totally disagree with the second, since a lot of people even have kids when they join.
Hey, you don't know, man. Like they could be adopted. Like,
and for the first one, I think they are really into hire people with academic success, even if it's completely irrelevant, right? Like you are just really good at number theory or like algebraic geometry, which I believe is not like
nothing to do
very
with
useful. But they just want people that prove their research capability and are fresh white papers that they can basically teach them how to think about the market. I think that's kind of their philosophy, partially to just like create a different set of like talent pool. Second, also like to protect IP. And I think the way they protect IP is like some non-compete plus allow your money to roll in this like fund.
Yeah. No, they have a really if I remember correctly, they have a really clever way of doing it. So like, I'm sure the viewers don't know, but like, you know, you were at a quant fund. I used to work at discretionary hedge funds. And
Oh, right. Which one?
I started off at this fund called Lone Pine Capital, which, which is founded by Steve Mandel. He's probably the most one of the most successful Tiger Cubs. So like Julian Robertson was the original kind of like Tiger management, right? And you know, when Steve worked at Tiger, he was the retail guy. Like he was, you know, Walmart was his baby. I'm sure Costco, right? Like he basically figured out these business models and the kind of flywheel and the quality aspects of them way before people went on podcasts and talked about it, right? And then so Steve started his fund. He made a ton of money betting against the internet bubble in 2000, 2001. I remember when I joined, they made me read all the historical quarterly letters. And it was interesting because like he launched, I think in like 98 or 99. And then in 2000, you know, and he was talking about shorting the bubble. And then in 2000, 2001, right before the bubble burst, I still remember.
Shut down.
No. Lone Pine didn't shut down.
Oh, Lone Pine did. Yeah.
Tiger shut down. But no, I'm talking about Lone Pine's letters. So Steve literally wrote, it's like, yes, so it's interesting. We've been shorting these internet companies, but we recently just lost like, you know, a third of our analysts who decided to join internet startups. And
so
I'm like,
the same thing as Jeff Bezos, right?
Yeah.
I do research on this investment. I decided, okay, let me do one.
Exactly. But Bezos did it before the bubble blew up.
Yeah.
Steve's analysts left at the peak of the bubble. Or like a quarter or two before. So like in retrospect, I'm thinking about this. I'm like, so if you're a fund and all your like really highly paid analysts start leaving to join this like new thing, it's probably the peak, right? Because like financial, I mean,
no, it's probably also means there is a Gardner curve that after it's crash, it's gonna pick up again. It's like when talent density reach something because crazy amount of capital goes in, it's either completely empty and like crash or like going up. And the sign of like all these smart people after digging and do deep research decide to join even with hype and everything. It means that there is gonna be another Gardner curve that.
But that's only after, right? But these people joined at the peak. We're talking like literally like a few quarters before
but
PayPal.
Typically people have like this career transaction cost. When they join a field, they will spend a few years, and if there is really real things to do,
that's fair.
They
they'll
might
stay there
and then keep pushing the field.
So I did Lone Pine. That was my first job out of college. Actually, the funny thing is the first company they ever had me research was Tesla.
Oh wow!
Yeah, I got to drive
stuff. Go all in.
Bro, I mean, like back then, like I'm just a kid, right? I have no idea. But I remember we investors were invited to visit the Fremont facility. So they just bought the facility from Numi, which was a JV between Toyota and GM, failed JV. And I remember when they bought that facility, people were like, "Dude, this thing's like not even worth nothing. It's worth the environmental liabilities." Because apparently there's like a huge environmental liability if they shut it down. People were like insanely skeptical, Elon. I remember we toured the facility. They showed us this giant fucking press that they bought used from some German conglomerate or some German company. I forget what it was. But anyways, they bought this used press. And Elon's like, "Yeah, guys, we're gonna print cars." And like literally, I can just see like the jaws drop on all the investors out there. Like, and these are people that like invested in Ford and like Toyota, and they're like, "You can't print cars." And he's like, "No, we're gonna print cars." But no, it was great. It was a great lesson for me to like realize like, you know, most investors, you know, even if they are first principles thinkers, it's hard to see the future.
Yeah.
So I did that for 4 years. I did Chinese internet. That's how I know a lot about Chinese companies. I did
where? Also Lone Pine.
Yeah, Lone Pine. Okay. So like, you know, Tencent, this is even before Alibaba IPO'd. Tencent, Baidu, all these gaming companies like NetEase, Shonda, Perfect World, Giant. I mean, these companies no one is anymore, right? Shonda actually became a hedge fund, FYI. They were a huge investor in CYH, a community health systems, this like nearly bankrupt hospital system. Anyways, long story short, 4 years there. Then I worked for George Soros for 3 years.
Oh wow! In Quantum or in his family office?
No, so his family office. So what happened was, this is kind of fun. All right, guys, you guys know our Treasury Secretary Scott Bessent. You know, like so, George started off. He basically invented macro trading, right? Like before Bretton Woods, it was like gold. Like you didn't really like freaking trade currencies and stuff. And he was the one that realized like, oh my God, now that we have Bretton Woods and then like, you know, whatever, nothing is pegged to gold anymore, like currencies should move. So, you know, his early partner was Jim Rogers, who was, you know, notorious China bull, not notorious, but like famed China bull. And I think like that's what helped George a lot initially. And then obviously came Stan Druckenmiller. And Stan is, you know, truly one of the greatest discretionary investors ever, like ever. And, you know, Stan obviously helped George break the Bank of England, you know, break the pound. He helped him with the Thai trade as well, Thai bot trade. But unbeknownst to everyone, this is kind of interesting, Scott Bessent is actually like a direct descendant of Stan. So Scott worked really closely with Stan. So like think of this as like George, Jim Rogers, and then under George, the Stan era was great. And then Scott studied under Stan. And then Scott, I think he kind of went off to do his own thing in 08. But then I think after 08, George basically returned all the money, the external in Soros. I think it was called Quantum back then, right? And so Quantum gave away, like it was $30 billion, shrunk to 15 in 2010, 2011. And then Scott, who became CIO, literally grew it back to 30. Like, so by the time I joined in 16, yes, 16, it was already $30 billion again. It was like crazy. He did like crazy run. And so Scott was like, okay, this is great. I'm leaving. And so George had to like hire a bunch of people. Yeah, I was one of the teams that was hired. And Scott went off to start Key Squared, right? And so, you know, ironically, our Treasury Secretary, who's like considered like based and conservative, whatever, has probably done more to contribute to liberal democracy than anyone else in the world. Like the Open Society Foundation has given out like $23.4 billion today, or some crazy amount of money supporting like liberal democracy causes around the world. And like, yeah, like literally Scott like funded a good chunk of this. But like, yeah, like now he's like, you know,
flip to the other side.
I mean, like, look, I mean, not to put too sharp of a point on this, but finance people are soulless, right? They have literally no souls, right? I'm just kidding. No, like this is coming from two finance guys, right? But like at the end of the day, like, you know, I think Scott is like super sharp and super smart. That's why, like, I don't know, at the beginning of this year when everyone's like, oh, this guy's an idiot, I'm like, guys, he's like, he literally studied under Stan, like, and he's super sharp. He's super smart. He's probably the smartest secretary treasurer we ever had because he's a macro trader, right? And I think, you know, I think that was a special experience. So I have also personally contributed to liberal democracy. You know, a decent amount of P&L.
Okay.
So
good for you.
No, and it's not good for, it's good for society, right? Like, yeah. I don't know why. Like, I talk about this these days, and even people in SF are like, oh my God, you work for George Soros? Is it true? All the conspiracies? Does he eat babies? It's like, dude, what the fuck, man? Like, are you guys like, what world are we living in right now? Like, you know, he's like, you know, Open Society is up there with like Bill and Melinda Gates. Like, no one's asking if Bill ate babies. They're just asking if he went to Epstein's Island. You promised me this will be unhinged.
Sure. Yeah. Totally fine. As long as Elon don't ban us from Twitter, we should be okay.
Elon? Bro. I don't know.
Okay, AI don't ban us from.
Yeah, I don't know what Elon's stake in this is.
Okay. But coming back, so I think you did the Soros style, which is very different from Lampine style, right? It's very much micro-based and instead of like deep fundamental.
I mean, look, Soros at that time had a bunch of I'm sure you saw this at the Citadel or at Millennium as well. Soros at that time had a bunch of different portfolio managers and different groups. Everyone does something different. And so I basically did the same thing I did at Lampine, except across way broader number of different asset classes, geographies, and industries, right? And that's actually when 16 was when we started really looking into like AI and semiconductors. That's when I started getting really smart on these companies.
Wow, it's very early.
Yeah, so like I don't know if you guys, everyone remembers, but SemiAnalysis actually put a tweet out about this recently. From 2000, I want to say 2012, 2016, or it was about 5 or 6 years. NVIDIA had basically this royalty coming in from Intel that was like a result of a lawsuit. So long story short, at one point, Intel invited NVIDIA to kind of enter their ecosystem and produce an integrated GPU for Intel. And that integrated GPU connected to this one thing called, it was either the North or South Bridge, I think it was a South Bridge. And so NVIDIA had a big business where they would basically like, oh, here's the Intel motherboard. I'm going to slap on this integrated GPU for like a laptop or whatever, right? And then, you know, I'm making money on Intel. And then at one point, I think on the Nehalem architecture, Intel basically changed the architecture so that it removed this Southgate. So NVIDIA, Southbridge. So NVIDIA can no longer connect. And so they could no longer sell a product because Intel was like, screw you, NVIDIA. We've learned enough from you. We're going to make our own GPU and we don't need you anymore. So NVIDIA sued them. And it was like, you guys reneged. We had an IP sharing agreement. And so they sued them. And eventually Intel settled and agreed to give NVIDIA $1.5 billion. But Jensen, Big Brain Jensen realized if investors look at $1.5 billion on my balance sheet, they're not going to value it like $1.5 billion. It's just cash, right? So Intel, I want you to pay this to me over like 5 to 6 years in chunks. And so he was able to recognize those chunks as profit. So if you guys go into, if you have the desire to do this, look at NVIDIA's 10Ks from 2012, 2016, and you can see their segments. They had GeForce, Tegra, and an other. And an other in any given year is between 150 to $300 million. And if you look at that other portion, it's like a large portion of profitability. So in many ways, Intel's legal settlements basically funded the development of CUDA because that was a period where Jensen was investing most in CUDA.
I see. Wow.
Ooh.
Okay.
See, we haven't even talked about AI economics.
Wow. Oh my God, this is so interesting. I think in your AI token economics thing, you were talking about basically NVIDIA is becoming the new compute central bank, right? Essentially, set the price and decide who gets H100 and B200 first to be able to kind of develop, and then they also kind of use the discount plus the direct investment approach to basically modulate the price individually for different new clouds.
Yeah, that's a good point.
It's kind of interesting that from this point of view, CUDA is almost like a Swift of like money system. I mean, if you use like the extreme analogy and believe that if you ignite, if you assume the TPU ecosystem, the AMD, the Trainium are not relevant for the next, I don't know how long, which probably is not true, right? There's like
we got 933 viewers.
Oh yeah.
Is that a record for you?
I don't think so.
Wow, I'm embarrassed. This fucking algorithm sucks. Google, upgrade your TPUs.
Yeah. So
what's the question?
So the question is, how do you see CUDA from the early days where it's like becoming this bet of Jensen to, at some point last year, people believe this is very large kind of moat, to the point now that I personally don't believe CUDA is moat anymore. People just use like a PyTorch plus JAX and you can pretty much like swap away.
I would say this. SemiAnalysis at semianalysis.com, also on Substack. Please follow our Twitter and engage with our LinkedIn post.
And you guys should pay me for the advertisement.
Oh no! Oh,
just joke.
We're paying you by not charging you like $25,000 an hour for this podcast.
Okay.
No, SemiAnalysis wrote some pretty good articles recently. Yeah. You know, to be honest, our firm is pretty interesting because one, it's never really existed like this before. There's never been a blog and a research shop that's like molded into one. And Dylan has done an insane job of recruiting good technical talent. I'm not technical. I'm more like finance build, but he's done a really good job in recruiting insane technical talent. And we're extremely influential with these companies, right? So I would encourage everyone to look at, you know, the Trainium article we just wrote, the TPU article that apparently caused waves. But if you guys don't understand, there's an Ooga Booga edition on our Twitter. Y'all should read the Ooga Booga edition. And then, you know, we wrote about AMD in December, right? And then we also have this benchmark called Inference Max, which is, think of it as the culmination of all this like goading, you know, people to work on the software stack. So long story short, I agree with you to a certain extent, right? Like obviously the CUDA moat was strong simply because no one gave a shit, right? Yeah. When they were shipping like, I'll make up a number, tens of billions of dollars of P100s a year or whatever, like no one cared. Now they're shipping like tens of billions of GBs, like, I don't know, per quarter, like per couple months. So, you know, and there's like, according to Jensen, there's like 3 million of the GB on a package level, not on chip level, on order, like 3 million times that. That's like a couple $100 bill, right? So anyways, so roughly speaking, there's never been a higher economic incentive to figure this out, to abstract it away.
Yeah.
And we've been very, very vocal about this. The
Mhm.
CUDA moat is not CUDA. The CUDA moat is all the people that are developing on CUDA for free. All the open source contributions to CUDA. And NVIDIA has actually done a pretty good job in open sourcing more and more parts of CUDA over time, and making it more accessible to people, right? And being less of a chafe. So in my mind, NVIDIA has all the cards and they can continue to play these cards one by one, right? They don't need to like all, win all in one, because like they have to balance, right? They have to balance the fact that they're basically a monopoly against the fact that they need to compete. And they don't want to be shut down by the government, right? Right now, the number one enemy of NVIDIA is the government, the US government.
You don't think it's Google Cloud? You think it's the US government?
I thought the number one enemy of Google is also the US government. So just FYI, there's no one that's stronger than the US government.
Oh yeah, of course. But at this point, I don't see like Google has a legit competitor, OpenAI, and NVIDIA has a legit competitor, which is a TPU.
I mean, look, we're really excited for TPU to work natively with
Yeah.
VLM, SGLang out of the box on models, but hit me up when we get there. You used to work at GDM, right?
Yeah. I used to work there when it's TPU generation 1.
Yeah.
And it feels terrible to use TPU, and I just want to use K80.
Believe it or not, using TPU for 99% of the population of the world still feels fucking terrible.
Yeah, but you have jacks which kind of hide a good amount of this, that like Anthropic and some of the other models.
Did you read the blog from Anthropic?
Which one?
The a post-mortem of some of the issues we recently had with quality.
Yeah, okay, yeah,
you should read that blog. What that blog tells you is, well, one, Anthropic is the only other lab in the world that can get this shit to work at scale, and two, even they have issues because the specific layers or the specific map models in their model is different from Google, and so they run into, like, this was like a precision error, right? Where they cast up, cast down differently. They run into issues even with JAX6LA, like at the very micro level. And in many ways, that it's like, this is the shit that like NVIDIA, CUDA, blah, 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 open source, PyTorch people like work on every day and solve, right? You have 2 customers for TPU. No, it's gonna be great, right? They're gonna try to open source it. Anthropic obviously is super motivated to diversify their compute mix, but like, guys, like we got so far to go. And is it the biggest threat? Yes, but that's like saying like, I don't know, what's the equivalent? Let's like, the biggest threat to our lives on a daily basis is driving a car, right? Because like that's like,
you think it's that far? Okay.
I mean, no, I'm just saying it's like
not even Euro.
No. Statistically, you're much more likely to die driving a car than anywhere else. But do we think about it every day? Like, is it like is it like top of the list of things that we're gonna die to? Probably not. Like,
I see. Yeah.
Heart disease is worse.
Okay. That's very interesting view. It seems the whole.
This is not the SemiAnalysis blessed. This is Wei's personal view. Disclaimer: Bill's son looped me in on this podcast without telling me what it was about. Promised me it would be unhinged. No, I mean, look, I'm just giving you the state of the world right now, right? Which is there's no one. It's not an open source, and it's not easy to use, and it's not like they haven't open source compiler. They haven't open source any of that stuff.
Yeah.
Amazon, on the other hand, actually is going to do that, right? They're going to open source the KI, the compiler, the kernels, everything, right? And because Amazon has the same problem.
Yeah, but they have
a single customer.
Yeah, like chips.
Whoa. Bill, I thought you were going to prep for this. You didn't read the Trainium article? Trainium 3.
I don't believe it.
Bigger racks. I know someone from Amazon is going to listen to this eventually. The biggest racks. We're talking MVL 72 times 2. I don't know if you guys can do math. That's 144. And these are 144 actual packages, not Jensen math, right? Jensen math, MVL 144 it's the same thing as MVL 72, right?
Yeah.
This is 144 packages, 2 racks linked together.
Yeah.
Big world size, giant memory, low cost, ooga booga.
Yeah, I don't buy. Based on my understanding of the whole land, I think TPU system is the only real kind of trainable system.
TPU is a Taurus. Taurus is extremely hard to use. You use it, right? Like when you use a 3D Taurus or 4D Taurus, you have to think about the number of hops. You have to think about where your model weights sit. Dude, all to all is the best thing to ever happen for ML because you hit a button, boom, dispatch, combine, easy. All right, and MOE is what everyone's doing right now. So when you do 3D or 4D torus, you have to have basically a galaxy brain to make it work. And Teton, no more code names. Ultra Server Trainium 3 is switched ICI. So it's super easy all to all, 144 world size.
I see. That's cool. Yeah, this is
a big advertisement for Amazon right now.
Yeah, based on all my friends who attended a reInvent like last week, what I gathered is like, Trainium 3 is like okay, but definitely not to the point. It's more, to me, it's like a very, very alternative bet. Just like AMD catching up with NVIDIA level. That,
I mean, honestly, yeah, AMD and Trainium 3 are probably in competition, is my guess.
Yeah.
At the end of the day, all these guys are racing. Switched ICI is much easier for people to understand and use than Taurus, just straight up. Even if a Taurus is more efficient.
I see. Okay, so you think it's still the developer community, the easy to use, the mind like burden of like developing a new model is becoming a real thing. Okay, that's fair. Yeah. Okay, another question. What do you think will be the base unit for like what's the cost of token? Do you think it should be based on like gigawatts, or should be based on like dollar capex plus opex?
Ooh. All right. Let's level set on tokenomics. So token prices from an API perspective were clearly just totally made up.
Yeah, of course.
But by someone very smart, right?
Yeah.
Because you notice the input tokens are way cheaper than the output tokens. And then since the end of last year, people are like, by the way, if you have a prefix hit, free effectively, like 90% discount on the input, right? Yeah. So token prices are basically reflective of how long a GPU spends to process a token, right? And it's much cheaper and easier to process a prefill token because you're just doing, map models on long sequence length, right? Easy to batch. You're maximizing flops versus decode, right? Which is, again, your memory bandwidth bound because you got to load KV for every single query, and then you can only fit so many KV in each chip or system of chips to produce the next token before you had to load the next KV, next KV. So token prices and costs are purely a function of model architecture and system architecture. System architecture being far more important, in my opinion, than individual chip architecture. So I think that the basic, first things first, tokens are a vanning metric because not all tokens are created equal, right? If you go on inferencemax.ai, by the way, rebranding pending because we're getting sued. If you go to inferencemax.ai or just inferencemax, I don't know, you'll find it. SemiAnalysis inferencemax. You can toggle around the different models, and you'll see like GPT OSS and DeepSeek and Llama 70B, right? And when you toggle around those different models and you pick the same workload, like let's say 8,000 tokens in, 1,000 out, and use the same quantization, FP4 or FP8. I think FP4 is on all the tests. And then you toggle cost per million tokens, because that's usually how we measure token costs. You'll see that each one has a different cost, right? And generally, the larger the model and the higher the active parameters, the more expensive the token. And so, active parameters matters. Why? Because, for a dense model, all the parameters are active. Like Llama 70B, all the parameters are active. So every 4 pass, you had to activate 70 billion parameters. Think of that as a proxy for compute intensity and time spent in GPU, right? For DeepSeek, right, only 37 billion parameters are active, even though the whole model is 1685 B big. And for GPT OSS, this is an even better example, right? It's 120 billion parameters, but I think 5 are active. So OSS tokens are actually cheaper than Llama tokens. So when you think about token prices and costs, there's basically 2 dimensions of it. One dimension is just literally how much time does it spend in the GPU, because GPU depreciation plus electricity is literally all that goes into the token cost, right? The other thing you should think about is well, okay, that's the cost, but what's the value of it? I would argue a 70B dense active parameter model, right? Like Llama 70B, that each individual token, even though it costs more than a GPT OSS 120B token, because has more active parameters, it's not worth more, right? I don't see that many people using it compared to OSS, So cost is different from price, right?
Yeah.
Cost is what, like, how much time it spends on GPU. Price and value is how much people are willing to pay for the output.
Yeah. My question is, today, of course, there is some monopoly power and like there is a bunch of different things. But on the long run, one thesis is you should price everything as a unit of electricity, which is like the fundamental limiting factor. Another is like, okay, GPU depreciation, everything should be bigger chunks forever.
I'm not actually Mustafa said this in a interview recently, the head of MAI. Power is it's a constraint, but we're not like we're limited by power, we're not constrained by power, which is kind of a nuance, right? So what does limited but not constrained mean? I'm a big believer in capitalism. And when all these power companies and these turbines and these battery companies and these fuel cell companies, when their stocks go ballistic, my God, they can invest, right? These people are not like super like studying the capital cycle, right? They're not Stan Druckenmiller and they can predict the future. They're just like, okay, my stock price goes up, I get rewarded for doing this, I'll do more of it.
Yeah.
You saw this with neoclouds, right? Some of them were like, oh shit, the more GPUs I install in my piece of shit data center, the more my stock price goes up. The more I announce, the more I go up.
Yeah.
The more I buy, the more
I earn, right?
The more I earn. And they're like, holy shit. And then they'll just like go out there, they'll sign whatever fucking contracts they want to sign. Because it's like, dude, like the stock price goes up, right? And so, at the end of the day, like people take these short-term signals as like an indicator of what they're doing is right or wrong. So I firmly believe we're power limited, not power constrained, because my God, guys, like don't underestimate human capitalism, right? Like it's fucking amazing. Dude, this company, Boom Supersonic, okay, they were gonna build the next Concorde. I shit you not. They wanted to make flying supersonic again, which is amazing, right? Like what a pitch. And turns out no one fucking wants to pay that much for a flight. But jet engines are not so different from on-site gas generators. And so they've repurposed their fucking jet engine to do DC on-site gas jet, because behind the meter power, which is, basically it's like power that, doesn't, hit the utility bill or utilize the infrastructure of the electricity grid, way fewer regulations, right? Way easier to get up. Like, think of it as having your own country, your own currency, your own country. It's like having a reservation in America, right? And so deal with the power company, don't have to deal with ERCOT, deal with APJM, don't have to get approval for grid stuff, right? Because these guys do whatever they want. So we're not power constrained, we're power limited. And just like AI, we're not like, I don't think we're actually constrained by the technology, we're constrained by our imagination.
That's interesting. So following up on the energy point, do you think the whole like market investing into like a small nuclear fusion thing?
Oh, I have no opinion on this stuff. Like, we're not going to make this about stocks, my friend. Unfortunately, stocks are dangerous because you say a stock name, people buy it, they lose money, and then they put a hit out for my head, and I'm like, dude, I don't want to die. I don't want to die.
Yeah.
I would like to live to see AGI and ASI. Isn't this the AGI podcast?
Yeah. Okay. So, switching gears. So basically, your view is still the capitalist cost per token is the correct way to measure unit economics.
I love this. We now have to define what capitalism is. We live in a world where capitalism is no longer the default way we measure value.
Okay.
Wait, well, how would you define it?
I kind of agree with you, but I kind of implicitly like plug in this like quasi Moore's law style saying that I believe the chip depreciation should go much faster than what like is on all the like 10Ks.
Okay, let's take 2 steps back. All right, finance lesson.
Yeah,
you might like this. I mean, you're a quant, so you never really look at financials, but all right, guys, the GPU depreciation. Oh, it's so hot, so hot. Let's Michael Burry, get him on. Okay, guys, what does depreciation approximate?
Just the leftover value.
Exactly. Right. Okay, depreciation approximates the leftover value. Okay, do you see this coffee cup? whoa, coffee cup. I bought this coffee cup. Let's say I bought this for $100. And if I implement straight line depreciation, this coffee cup becomes worth over 5 years, right? This coffee cup becomes $20 worth $20 less every year. Next year, I'm drinking this coffee cup. It's worth $80 on my balance sheet. Right? My personal balance sheet is worth $80. 2 years from now, it's worth 60, 40, 20, 0. By year 5, this coffee cup's worth 0. What if I fucking told you this coffee cup did not break by year 5?
Yeah. I totally get your point.
Okay, so if this thing didn't break by year 5, well, I was overly conservative on my depreciation.
Yeah. But I think the counter argument is there is a point where if you use old enough chips, your electricity bills does not break with like when you use the newest car to pay out the premium plus the electricity.
How much is electricity per hour? What's the cost of electricity?
Right now, it depends on the country.
Depends on country.
It's expensive, but
okay.
I think if you look at
what's a good ballpark dollar per kilowatt hour?
I don't know.
You're me?
Expert. Yeah.
No. It's like 8 cents per kilowatt hour, something like that. Like at the end of the day, I think if you take a GPU that's at 1,000 watts and you do the calculation, my guess is the run rate cost of electricity is $1.50 maybe per watt.
It's very far away.
Per watt per year, something like that. So you can do the math. I mean, SemiAnalysis might even write an article about this. Who knows? But like you can do the math. Like the electricity break even is actually so low, it's not that meaningful. What really matters is, are you still able to produce tokens that are worth paying for?
I see.
Yeah. Okay, go to my prior example. A Llama 70B token, we can all agree, well, maybe we can't because Mark Zuckerberg might not agree with this, is essentially worthless today.
Yeah.
Right?
Totally, yes.
The cost is a 70B active parameter token, but the price that people are willing to pay for it is close to negative.
Yeah.
However, a GPT-OSS token, which fits on an H100, much as it fits on a B200, much as it will fit on a Vera, much as it will fit on a Feynman, is pretty cheap to make.
I see. So that's the correct
but that
way to think about it.
The cost of a GPT-OSS 5B parameter active parameter model will be more cheaper for every subsequent one. But I'm telling you, man, what is the difference between 5 cents versus 3 cents versus 2 cents versus 1 cent? It's not an order of magnitude. It's a big difference from percentage. But if the clearing price is like $1 or 50 cents, what's the impact on margin? The impact on margin. Now, please, for the love of God, do not send this to Jensen. He will fucking he will freak out because he wants everyone to buy the newest stuff. But like realistically speaking, if active parameters don't skyrocket, which they may, you never know, for a certain class of models, it's more efficient, but it's not like 10x more efficient.
There is still a need to distill to a smaller model that fits the older card, and that's if you can run a distilled frontier open source model, then your card is still valuable. That's kind of your argument.
The other thing is we talked about power, right? How are these chips getting more effective? The power per chip is going up. So if you divide the ability for this thing to generate tokens by the megawatts or the kilowatts of the card, that improvement is a lot less steep than the actual gen on gen improvement, right? And again, if we're power limited, not power constrained, but power limited, your token factory is a function of how much power you have times the equipment you have. And if we get to a point where we have a lot more power than we are, and we no longer need to have the most leading edge chips in every single data center, then you basically have I made this joke earlier this year, it could be the case that we have a bunch of Ghibli factories, right? Like these data centers that are literally just producing Studio Ghibli, because that image gen model at a certain point, it's hard to tell the difference between a really good image. And so that model development may freeze. In fact, it might get more and more efficient, right? They might get better and better. Part of the reason
run on your phone at some point.
Exactly. Part of the reason why Nano Banana is taking off so much is not because it's that good. It's because it's good for its size. I couldn't even imagine a year ago as good of a model as Nano Banana for image gen at that size.
That's true.
So guys, depreciation this, depreciation that. I would seriously, anyone that talks about depreciation GPU, if you cannot first principles reason tokenomics, you all should shut the fuck up. Literally, there's zero fucking value add from listening to that person.
Yeah, good point. So you're saying basically electricity is not the right way to see this constraint. How about what do you see as the other? There's clear
opportunity cost is the biggest constraint.
Okay. So I have this data center racks, and I need to run the business.
Yes.
And I should kind of replace my old cards to
exactly.
Cards.
So like, okay, ramping power is expensive.
Yeah.
You have to find these like, spivvy power providers. I won't name them.
Yeah.
You have to like get permitting. You have to get all this stuff. Ramping power is difficult. Yeah. So at some point, you're looking at this thing and you're like, okay, I have like a year or two left of the depreciation. These cards work great. Maybe some portion of the diet, right? Because that will always happen. These cards work great, but like I can get like 40 to make up a number, like 2 to 3x more output. With the newest generation cards, right? Versus these 3 to 4 year old generation cards.
Yeah. My total profit might go up by
exactly
upgrade.
But total profit is relative to what? It's relative to how much you invested, right?
Yeah.
These cards are like super depreciated. And so your ROI is probably really high because the carrying value of the asset is low, but the profitability is like not bad, right?
Yeah.
If you want, you go to your CFO and be like, okay, this is going to cost us like $20 billion upgrade. And it's going to produce like a $2 billion uplift in profits, or it should be more than that, ideally, like $5 billion uplift in profits. So the payback is 5 years.
Yeah.
Sorry, 4 years, right? So then you make an economic decision.
I see. So the old cards, instead of depreciating to zero, will probably be resold to just like a third world, like a big enterprise that need to produce tokens for some open source model.
I don't know if you remember this, but like I'm gonna take this back. In the early days of iPhone, there's a huge business that came up. In fact, one of the guys that is super influential at SoftBank, he basically sold his business to Masa, and all they did was this shit, which is they took phones that people traded in the first world, and they refurbished it and sold it in like India,
I see,
and China. And like, there's a humongous secondhand market for phones, just like there's a humongous secondhand market for cars.
I see.
And a GPU is basically more expensive than most cars these days.
Okay. Here's one startup opportunity, everyone. Right? If you are hearing this podcast, maybe in 3 years you'll thank us for putting on a great
look, I think there are like countries in the world that don't need the best model, best performing model, and there's probably a lot of local demand for small models. And like, look, at the end of the day, these models are getting so smart that they're already eclipsing.
Tell the difference.
Yeah, and they're eclipsing a large portion of the world's population. And don't forget, not everyone in the world has like world-class education.
Yeah.
Right? Yeah. Like Singapore. I'm not going to say United States. And so, at the end of the day, like, just think of this as like replacing human intelligence, and there's a curve for that, and different cards may be like economically viable across the intelligence curve.
Okay. Yeah. Okay, now switching gears, how about other constraints like memory / kind of storage, like the HBM, the SSD, or you guys recently posted something.
Shouldn't you disclose how much memory stocks you own? Like, isn't this like part of the financial disclosure?
Financial disclosure. I own a bunch of positions on like storage, HBM stock loadings, and I kind of believe in the memory shortage story, but I don't know whether the whole market believes in it. There is a period the whole market believes in and it's pumping, but recently it's like shaking, right?
Financial disclosure, I've only owned Formula One event contracts over the last 6 months, and I have nothing but essentially bonds in my portfolio.
Yeah.
I have a stake in my old hedge fund, or like it's just like an LP investment, but I don't control that. So financial disclosure.
Yeah. So go back to like the storage question. I actually was pretty curious of how people think about it, because
I mean, look, at the end of the day, storage is a cycle. I encourage everyone to pull up this. There's a company called Lam Research. There's another company called Kokusai Electric. Those companies are the most levered to NAND and DRAM. So NAND we call NAND, and then DRAM we call it memory. But anyways, they're most levered to NAND and DRAM capex. And you can kind of look at their historical financials and see where we are in terms of the amount of money they're making selling equipment to make this stuff relative to historical. And at one point it was looking very grim because, AI was kind of sucking all the wind out of the market.
Yeah.
Everyone had to reallocate resources to buy like, GPUs rather than storage and stuff. And now that's kind of flipping back. So you can kind of look at that as an objective measure of how underinvested we are. It's a good question, but like, honestly, in my, limited experience investing, These things always resolve themselves because I believe in capitalism.
Yeah. But it takes time, right? There is a short-term shortage. So
correct. I was looking up how to upgrade my laptop memory, and turns out 64 gigabytes of laptop SODIMM is going to set me back $500 right now. And if you go on Amazon right now and you look up all these, you want to buy like a consumer SSD or a consumer DRAM, you're going to see all these random companies you never heard of, all these brands you never heard of before, because man, it is a dicey market for securing memory right now. Now, I mean, usually these things end up correcting massively on the other end. So I would just say be very careful, everyone. There's no investment advice here. I refuse to give investment advice. I've learned long ago not to do that, and so yeah, just be careful.
Yeah, but from token economics point of view, do you see a time that you should include like storage memory cost into your tokenomics? Since there's like KV cache.
It is a good question. So yes, I agree. So KV cache, right? Yeah. Should we? If Weka is watching this, y'all gonna love this. Weka and Vast, we'll be fair. So that's a really good question. For those that don't know, when you type in stuff to the chatbot, right? And we're talking about like inputs and outputs, right? Believe it or not, it's really expensive to keep processing your inputs over and over again. And when you type in a query, what happens is your inputs get converted and stored in this thing called keys and values, KV. Sometimes people call them KV cache because there's like literally a cache for all this stuff. And then that KV cache gets shuttled over to another system node that processes it and to produce decode tokens, which are basically output tokens, right? The one word at a time. As AI workloads move more into like actual like use cases versus training, KV cache becomes a meaningful consumer of dollars, right? Like you can't serve API or ChatGPT or whatever without a large amount of host DRAM and potentially even NVMe SSD to allow for this cache to sit. Now, what's the point of KV cache? The point of KV cache is we never, ever, ever, ever want our GPUs to be essentially KV cache, right? We never want the KVs to sit in the GPUs. GPUs literally, they load the KV, they process it, they process tokens, and they kick it out, kick it out. And this rapid kicking out motion is why memory bandwidth is so important, right? For decode. And so when we kick it out, we got to put it somewhere. If it's a active conversation, or like an agentic workflow, and you expect to recall that KV cache quickly, you want to put it somewhere close to you, right? And the closest thing to VRAM or HBM is host memory, which is DDR. If you're chatting with ChatGPT and you ask a question and you got a few minutes before you go back to it, like let's say you ask for a cooking recipe, right? You don't really they'll tier it. They'll figure out like, okay, this guy, it's gonna be a while until he needs his KV. I'll kick it to SSD. So at the end of the day, the more that we move towards inference workloads, the more
SSD, then
the more tiers of memory we'll need. Right? That's DRAM, which is different from HBM, right? And SSD, and potentially even hard drives. Right? Because now, if you generate a Sora video or whatever, that shit needs to get stored somewhere. So no, the answer is yes. But again, no investment advice.
Okay. So
other than please don't bet on Ferrari. I'm just kidding.
Okay. Another thing is there's another limiting factor that people believe is why cars have this difference, which is connections, right?
What kind of connections?
Oh, just say the replacement of NVLink, and we talk about the 3D, 4D towers.
ICI. So ICI is the term, inter-chip
connect.
What does I stand for?
I don't know.
Interconnections? Inter-chip. Wow. Wow. Now
inter-chip link.
No, it's dude. I've been using ICI this whole time. All right, guys, I'm not a professional. All right, don't take any of this as serious. But it basically refers to the connections between the chips.
Yeah. There's a lot of eyes on can, for example, AMD catch up by putting up something similar to an NVL72, right?
It's called the Helios rack.
Yeah. So the question is, in your tokenomics setup, would you consider this as one of the limiting factors that actually more of your current analysis that you only consider basically GPU marginal cost and electricity.
Dude, it's not even on the internet. Chip to chip interconnects. Inter-chip interconnect.
Interconnect.
Yeah, not to get too much into it, but basically what I said before, for the decode step, especially for large sparse MOEs, basically at every FFN layer, you have to transmit the tokens to top K routed experts.
Mm-hmm.
You have to do that in large batch size to be efficient. So you're basically spamming tokens to experts that sit in different GPUs. And the faster your communication bandwidth, the faster you're able to do this. Now, a lot of people might be like, oh, why are we spamming experts all these chips? Why don't we just keep it on one chip? It's like, well, believe it or not, like the best way to do all this stuff is to basically have as many chips together in the same kind of world size, to be able to spread out the memory and the KV for each user. And essentially, the larger the interconnected chip rack, the more efficient your MOE decode is. And these labs, while prefill, aka input tokens, are the vast majority of the tokens, decode is a workload that they care most about. Because again, like we talked about earlier, prefill, you can alleviate a lot of that bottleneck with KV caching, right? And prefix matching. Whereas decode, there's really not much ways to alleviate the bottleneck other than having better ICI. So yeah, I mean, we're really as a company, we're really excited for all these different rack scale architectures to appear that can, because right now a lot of the world is operating off of 8 GPUs at a time, right? And so you have only 8 GPUs that are connected at very high speed ICI. And these rack scale architectures for like Helios will be 72 GPU world size for MI450. As I said earlier, Amazon with their big racks will be there'll be two flavors. One flavor I think is 36 by 2, which is 72 total, and then the other flavor is 72 by 2, which is 144 total. So one flavor is a single, I think, air cooled rack, 2 air cooled racks, frankly. There are 36 chips in this box, 36 in this box, super connected. And the other flavor is liquid cooled, right? Because it's very high chip density. So it'd be 72 in this rack, 72 in this rack. So Amazon will actually have the largest world size of the fully switched fabrics, besides, because like Google is like very large world size, but it's a Taurus, right? And again, totally different thing. So Amazon will probably have Trainium will have the largest rack world size until NVIDIA comes out with the Kyber rack. The Kyber rack, which they call the NVL 576, is 144 logical GPU die. And 4 chips per die, and that's going to also be 144. But it will be in a single rack, not like these 2 interconnected racks, which Amazon is kind of hacking together. And so, yeah, I mean, as the bigger the rack, the better.
I see. So you kind of believe in this approximately fully connected structure than Taurus based on our.
No. Hold on. Like, this is. I'm not shitting on Taurus. I'm pretty stupid, right? Like, so I have no idea how shit works. But like, Taurus is just hard. Like, I don't know if you guys read the TB article. Like, most of our clients struggle to understand it. I struggle to understand it. But like in general, a Taurus, if you think about just think about a cube, right? And each point along the cube is a chip. Unlike a fully switched fabric, like a fully switched backplane, like MBL or Helios or Trainium, when you do that part where you send the experts out, like we send the tokens out to each expert to get processed, there's no all-to-all. And no all-to-all means each chip is connected with every other chip, right? So it's like totally like easy-ish way to think about it, because like when you send out comms, it just sends it out to everyone, it bursts to everyone, right? Because you don't know which tokens from which GPU needs to go to which experts and which GPU. So with all-to-all, you don't need to like think too hard about it. You might get like traffic hotspots and whatever for really popular experts, but like that's something you can solve. For Taurus, you'd be like, okay, I'm sending out this expert now this token now to get processed by experts. I pray to God those experts are roughly within the same distance from that part of the chip as every other expert, right? And you had to figure out how to balance that, because now instead of all to all, you had to do hops. You had to hop, 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 hop. And Google with, big brain Google with OCS, optical circuit switch, they're able to do something where you're actually able to wrap around, the torus. So you're not bound to just the faces of the cube. You can actually go around and stuff. But it's like apparently super, super difficult. There's only, a few companies that have been able to get it right, Google and Anthropic. And yeah, like, it's just a different switching architecture.
It's interesting. My thesis is they will give some kind of like low-level operator that abstracts some of this away, where researchers just write jacks and whatever can be implemented jacks can be efficiently.
Your faith in Google is admirable.
Okay. Yeah, since I kind of believe in this computer abstraction layer theory, that since I'm a mathematician and I never touch low level. My wife never touched low level, even as like a person who works in the giant model industry.
Right.
I feel like we still get our work.
Yeah, look, to be fair, like I just touch Excel and
No, seriously, it's like even when we train models, we just stay at PyTorch versus JAX. JAX brings some complexity, but pretty much there are people taking care of.
I agree, but it all goes back to who's solving the problems and is there an opportunity for problems to be solved? Because right now there's like, 2 model architectures in the world that run on TPU.
Yeah.
Right. And Jensen is absolutely right. Every fucking model runs on his.
But that's 2 out of the 3 state-of-the-art model.
How much is state-of-the-art models as a percentage of total models?
Oh, that's true. Yeah.
In terms of model architectures and in terms of spend, even in spend, it's not that much.
Yeah.
I mean, I can tell you, but yeah.
Oh, no, it's okay. I think.
Just kidding. Too valuable.
Yeah. Okay.
Wait, enough of this nonsense. Let's talk something fun. Come on, we got like 8 minutes left.
Okay. Yeah. So, one question, switching gears. Actually, I have this illusional hypothesis. I would say more science fiction that very soon there will be autonomous agent that actually calculate its own.
Veto. Not fun.
I think
not fun. All right, let's talk about this, guys. I don't know if PopMart stock will keep going up, but just looking at this and look at the quality. I mean, you gotta admire this. Like, there's like this detailed like, embroidery. I mean, I'm not gonna lie, PopMart has competition, right? Like, I love Labubus as much as the next person, and there's certain people at our firm that are obsessed with Labubus, but like, you gotta admit, this is pretty fucking cute.
Yeah, but this business is not about competition even, right? It's like a kind of meme value to me.
Really?
So do my kids get obsessed with it, and am I willing to?
Bill, talk about your kids. When did you have kids?
Oh yeah, like 2023. And
really?
Yeah, I have like a 2-year-old kid.
Just 1 2-year-old?
Yeah.
What would you say for all the people out there that don't have kids like me? Like, what would you from the bottom of your heart, knowing that this is gonna be recorded on YouTube and stay forever, and your kid may eventually watch this and realize that her dad is like was a Omega base lord before he became like soccer dad.
No, I mean our kid is kind of the official AGI baby, as before the kid was born, we live in AGI house as the only couple in this kind of like a upgraded fancy mansion that we live basically a upgraded version of like frat house in Stanford, right? We're all like a kind of buddies in Stanford PhD program and all that, and now we have some money, we rent a big mansion, we live together, we throw 400-500 people party, we also like do those 200 people podcast hackathon, like a private dinner, 30 people private dinners, all these events, and been living this life for 2 years until the kid. So the kid literally was born in the AGI house, and yeah, of course we moved to like another place.
That's wild. You raised your kid in a frat house. That's pretty.
No, wait.
I hope child services is not listening to this podcast.
We have the kid incubated. When the kid is born, I have to get a bigger place.
AGI house conceived kid. Dude, those must have been some parties. I mean, like, I don't know.
Every year I throw a pretty proper party for my kid's birthday, since I think this is something that she will remember. Like,
what's your kid's name?
Aria.
Aria?
Yeah.
That's beautiful.
Yeah.
That should be the next name of Claude's model.
Yeah.
What's your favorite model?
I use Claude 4.5 Opus for a good amount of my coding tasks.
How much has Open 4.5 Opus taken as a percentage of your token mix since it came out? Because like prices drop, right? And then it's also way less verbose than it used to be.
Okay, so for all my consumer tasks like deep research or talking to AI, 95% is still ChatGPT.
Not Gemini?
Yeah, 95. I only recently developed this habit that I copy paste my query from ChatGPT to Gemini 3
for deep research,
or for generic things that I want to compare.
Interesting.
But for me, I couldn't even tell the difference. So non-coding task, I don't even use
Gemini.
No. Even coding task, I don't use Gemini. Coding task, I use Cloud Code. Non-coding task, I start with ChatGPT and I copy paste to Gemini.
I've heard bad things about Gemini 3 for coding, like really bad. Like, I'm not gonna lie, everyone that's listening about this whole narrative that OpenAI is cooked, like, bro, try using 3 Pro for coding. The funny thing is, the day they announced Gemini 3 was the day that Anthropic announced their deal with NVIDIA and Microsoft.
Yeah.
My suspicion is they literally waited until that day to see if 3 Pro was going to take the coding crown back from Anthropic, looked at the suite, verified, vibed it out, and like, fuck this. Anthropic, here's $15 billion.
Yeah.
Literally, I think that's literally what happened. Because like, I don't know. I've heard bad things about, like, even like I browsed the Cursor subreddit and people like, it's just like not that.
Yeah, I'm from.
And then Opus 4.5 has fucking crushed it.
Yeah. I'm pretty firm believer of like data plus RL training, that you should just be good at your thing rather than just like
be everything for everyone.
Yeah, and also like I have beat this benchmark. That's why I'm close better.
Dude, I honestly do like Gemini 3 for whatever reason does feel a little benchmax. Not as bad as Grok. All right, Elon, please don't cancel us. But like, it does feel a little benchmaxed. HLE especially. HLE, I'm like, dude, how do you, bro? HLE is like the most irrelevant. Like, who the fuck cares what the tiny vein on the dragonfly's like wing, you know, like, or how many penises they have? Like, no one cares. Like, literally, this is like, there's like the most nonsensical benchmark ever. But like, it's humanity's last exam, dude, bro. If that was humanity's first exam, humanity would be cooked.
Yeah. Okay. We're approaching our time. Thanks so much. Let's have the last question, which is, what's your definition of AGI and what's your definition of ASI from a working point of view?
Super easy. I don't have to fucking work anymore.
For AGI?
Yeah.
So what's your definition of ASI? There must be a difference, although it's like 2 hype words.
ASI is when we're all dead.
Oh, okay. So ASI is something that have conscious and decide, oh, humanity is not worth.
I have this really great idea. This is a message to every AI lab in the world. Stop working on alignment. Make your AI take the Hippocratic Oath. We'll be good.
Okay, that's a very funny ending. Cool. Thanks so much, everyone, for attending this. It's an awesome episode, and it's probably one of the non-filter ones that I hope you might enjoy. Yeah, thanks so much. Yeah, bye. Okay.